Trading account is prepared by recognizing the following transactions in a business. Trading account we are talking about is a trading account of a company that is doing buying and selling. It's not for those who are doing manufacturing or those who are doing transportation. But it must trading account is that they trade something, they buy something and sell. So that is the major area you have to concentrate to understand it well. Now we're going to look at the items that will be considered in this while preparing the trading account. One, you consider the first item is the sales. What is the total sales for the period? You ask yourself, what is the total sales for the period? Two is, what is the return inward? Is there any return inward? If there's any return inward, what are those items? And what is return inward? Return inward is simply things you have sold to your customers, but the customer returned it, they are paid you, but they returned it to you back and demanded for refund of the money. You refund them back the money. So it's a return inward. That's what we call it in accounts. So you consider those items. I'm going to tell you how to prepare it, but now let me explain the item to be considered first. Then after that, you have what is called the opening stock. Opening stock is the stock that are being remaining. There is the initial stock at the beginning of the year or the accounting period. So you are starting your year January 1st, and there is a stock on that particular day. Then these are the opening stock. And you remember that is the closing stock of the last period becomes the opening stock of the new period. Then the next item is purchases. What is purchases? Purchases simply means the items for resale in a business. The items for resale. If you are selling laptop computers and you purchase the items to resell it and make money in your business, it is purchases. But if you happen to buy something like a television, wall plasma, chair for your office use, or table for your office use, those ones are not purchases. They are not purchases. It will not be considered in preparing trading accounts. The items to be considered is purchases. The purchase simply means the items or goods for resale to make money for a particular period. These are known as purchases. After purchase, we have what? Carriage inward. What is carriage inward? Carriage inward simply means the cost of bringing the goods from the place you purchased it down to your shop. Let's say you went to Lagos to buy your laptop computers. After that, you load it there and bring it down to your office in your UK office or any other office where you're operating. Simply means automatically the cost of bringing the goods from the place you purchased it down to your office where you're going to resell it is what is called carriage inward. Then we have again the cost of goods sold. Cost of goods sold is simply means the goods. There's the total cost of goods you have that is available for sale. We have total goods available for sale and total goods sold. Total goods available for sale are when you add opening stock, you add purchases for the period, you add carriage inward, the total gives you what? Cost of goods available for sale. Let me recast it again. When you add opening stock to purchases, then you add carriage inward, you have cost of goods available for sale. Now, when you less closing stock for the particular period you are preparing the trading account, the closing stock simply means unsold stock for that period that are remaining unsold for that particular period of preparing account. Those unsold stock and what is closing stock, then you less it from the cost of goods available for sale. When you less it or deduct it from the cost of goods available for sale, then you have the balance becomes cost of goods sold. Okay, I'm still going to recast again for students who are beginning the career in accounting for the understanding. Now, how to prepare trading accounts? In a trading account, you draw T accounts, T formats. You have the debit side and you have the credit side. Your right hand is a credit side, while your left hand is a what? Is a debit side. If you are drawing, the latest account is facing face to face. Now, in the credit side, you record total sales for the period. Let's say the total sales is 200,000 naira. You record it there. Then you less returning word from total sales. When you less returning word, you have the balance. Returning word may be something like 20,000. You will less it from 200,000 naira. Total sales. You have the balance of 180,000 naira. Then when you less it from 180, then that 180,000 is simply means net sales. The answer is what? Net sales. Then that is for your credit side of the trial balance. You now go to the debit side of the trial balance. You have the opening stock. The opening stock, let's say the opening stock is 50,000. Then the purchases is 60,000. And the carrying word is 10,000. Then you add 50,000, 60,000, you get 110. You add 10,000 carrying word, you have 120. Then that is the cost of goods available for sale. The cost of goods available for sale. Then when you less the closing stock, closing stock may be 20,000. Then when you less 20,000 from 120,000 cost of goods available for sale, then the cost of goods sold will become 100,000. Then when you now take the cost of goods sold and less it from the what? The greater side of the net sale, that is 180. Then you now discover that you have 80,000 naira. 80,000 naira becomes the what? Gross profits. And gross profits simply means that the net sales exceed or is greater than the cost of goods what? Sold. Which means in this account, net sales is 180,000. While the cost of goods sold is 100,000. Then the net profit, there's a gross profit simply becomes 80,000. That 80,000 is what is called gross profits for the period, which is the purpose of preparing trading account, is to ascertain the gross profits, 2, to ascertain the net sales, and 3, to find out the cost of goods available for sale for the particular period, and also to find out the cost of goods sold, and as well ascertain the closing stock. These are the reasons for preparing trading account in a business. Thank you, students.